Happy Monday out there, folks. This is Darius Dale here to present our macro minute for Monday, February 14th, 2022. Happy Valentine's Day. I just realized. Starting with markets, stocks down this morning, commodities down, crypto down, dollar up, global bond yields down. Big movers this morning. We got Nikkei 225 in Japan off 2%. The Germany's DAX index and the stocks Europe 600 index both off 3%. VIX out 13% to just under 31. 10-year German bond yield down 9 basis points. That's a 30% move on a day-over-day basis. So obviously a lot of the markets are concerned about the escalation in and around Ukraine. We don't necessarily need to have a call on that, but we do have signals and tools that will help us manage the risk appropriately. On the macro front, Friday's February University of Michigan consumer confidence data out of the U.S. confirmed that the Fed may have to tighten the U.S. economy into recession to quash rampant inflation. If they do not, we may get one anyway. So you get the headline print that ticked down to 61.7. Again, these are February numbers. That's the lowest print we've seen since October of 2011. Current conditions down to 68.5. That's the lowest print we've seen since August of 2009. So just coming out of the depths of the financial crisis and Great Recession. Expectations index that ticked down to 57.4 in February. That's the lowest print we've seen since November 2011. Taking it to the chart here, we got the next 12-month inflation expectations number that ticked up to 5% in February. That's the highest print we've seen since going back to July of 2008. We also got the current financial situation index compared with 1 year ago. So how do consumers feel relative to where they were a year ago? That ticked down to 97 in February. Big move down there. That's the lowest print we've seen since going back to November of 2013. That 9 point month over month deceleration, that's the slowest, that's the sharpest contraction we've seen in this index since going back to the lockdowns of April of 2020. And then lastly, the black line here, the expected change in the consumer financial situation in a year. So looking ahead a year, that ticked down, not ticked down, sorry, crashed 13 points to 101 in February. That's the lowest print we've seen since August of 2011 for that indicator. That 13 point month over month decline is the slowest, it's the sharpest contraction we've seen since August of 2019. So something is afoot. The Fed hasn't hiked the single interest rates. The single interest rate, the Fed hasn't sold nary one bond from its balance sheet, hasn't done any quantitative tightening, and the economy is already looking recessionary from the perspective of consumer confidence. And this is something we've been talking about for months now, and we're starting to see it really show up in the data. So just keep that front and center as we progress throughout this year. A lot of risk. From the probable range perspective, it's got silver overbought, nothing oversold in our global macro risk matrix. S&P 500, that is neutral VAMs minus 2.9% of downside versus 6.6% of upside. WTI neutral VAM still minus 10% of downside versus 2% of upside. Bloomberg Dollar Index, Bloomberg or bullish VAMs minus 0.6% of downside versus 1.4% of upside. 10-year Treasury yield, bullish VAM still minus 14 basis points of downside versus 20 basis points of upside. Bitcoin bearish VAMs minus 15% of downside versus 3% of upside. Ethereum bearish VAMs minus 16% of downside versus 8% of downside. So finally, again, we talked about this a week ago, but really did correct from the upper bound to those probable ranges. So be paying attention to that. And then lastly, gold is really just shy of its probable range, upper boundary of its probable range with 4% of downside versus only 0.2% of upside. And that's still neutral VAM. So with that, Darius Dale presenting our macro minute for February 14, 2022. Happy Valentine's Day out there, lovers.